first one up here. Large cap tech will rally when first rate cut occurs, says Grasso. I'm interested to hear what he has to say. I might have a little bit of a different opinion based upon what historically happens in this situation when you get that first rate cut. So I want to hear what he has to say, kind of share my perspective and opinion on that one, plus other subjects we've talked about in this video. Then our favorite bull's out, Tom Lee. Okay, we're going to hear what Tom Lee has to say. This gentleman posted up what Tom Lee said for basically his thoughts on the rest of this month. He was on CNBC about 7 hours ago or so. So looking forward to getting into that one, kind of sharing my opinions and perspectives in regards to that. I appreciate you guys. And let's get into this.
Overall state of the market. September is doing what September often does. It seems a little choppy. The first couple of days of this trading week were negative. What do you see from now on out through the end of the year?
I've been accused of being overly bullish sometimes, but I do pivot, right? So I pivot when I think there's a reason to pivot. And I still think that we're looking for higher markets going into year end. And when you look at September, people have said about seasonality, am I right? Correct. Seasonality happens. 2020 September was terrible. 2022 was terrible. But when you look at it on aggregate, that has skewed the last 5 years, because that's how they figure out seasonality. They take the 5 years and then they come up with an average percentage.
I think Septembers were bad before COVID, too.
So they were bad before COVID, but people are looking at that outlier of that down 9% September.
Right.
And there were a lot of things going on. And the interest rate environment was a lot less.
But if you're bullish in the long term, you should be cheering a September sell-off if you think it's just a blip.
You should, but as someone who's in my position as a fast money trader and someone who trades on an everyday basis or at least every week basis, trimming and adding different amounts, you want to be proactive on those months, as Kelly said. If you can get that, then you want to take it. But the problem is if you're a long-term investor and you get those months where they're down and then you sell at the lows.
For a while.
That's what most people do. Think about this. I think we're making this way too complicated when we analyze the Fed, where most traders and most people make life too complicated. Are we closer to the end of the rate rising cycle or the beginning? The answer is rhetorical. Right? So now if you're thinking about if we're closer to the end, what else are we closer to? The actual first cut. What's going to happen?
Wait a minute. Did the market weaken as a trading? I've been busy today doing a lot of different stuff, but had to make a private group video. I made a video for the main channel. I don't remember Apple being up that much. I'm going to pull up my big tech watch list here because I don't remember Apple. I remember Apple, like, if anything, being down today. Let's see big tech. Where's Apple? So Apple eked out a 0.35% gain here today. Interesting. Okay, so Apple was having a better day, and then they just kind of lost buying pressure. And then Nvidia, wow, Tesla actually finished red. When I was doing work earlier this morning, Tesla was green by about 1.5%. Interesting.
First cut, and everyone says, well, then there's going to be terrible news. No, there's not. It'll be greeted with welcome arms from the bulls on the street. And I think that's what I'm looking for. I'm looking for large cap tech to rally. We've had China, we've had rates, we've had everything hit large cap tech. What have people done with large cap tech? Used it as a safety play. So when banks were failing, they ran into technology. When rates were rising, they ran into technology.
But
they liked the fortress balance sheets.
They ran in also when we started seeing the market price in those rate cuts. So what's interesting to me now is we're getting closer to those cuts being a reality, maybe still 6 months out. Now they're selling out of tech. They only want to own energy. So it's like almost like they bought the rumor and are now selling the fact.
Yeah, I think you're correct, but I think if you add in the China dynamic.
Yeah, if you look at 2022, people were not going to tech to really hide out, to be quite honest. Obviously, Apple and Microsoft held together the best of big tech, but let's not kid ourselves. Amazon fell 50+%. Meta fell, oh gosh, like 70%. You know, stocks like Shopify, Netflix, the smaller big techs, those ones fell like 70%, right? Obviously, you know what happened with Tesla. That was like a 60-70% type fall. I mean, you go through the list, Google McDougal got hit hard, and it was not pretty for big tech. Microsoft and Apple still got hit hard last year. They just didn't get hit nearly as hard as some of those other stocks, but I don't quite buy the whole, you know, everybody just plows into big tech to hide.
Those are risks that people are looking at selling their large cap tech names. I think the bark is always much worse than the bite when it comes to geopolitical worries. usually, most of the time. When you know the old saying, when you're strong, act weak, and reverse, right? So China seems to be acting very strong. I think they're very weak at this point. I think that Tim Cook has done a masterful job of being able to be agnostic. He's a U.S. citizen, but he operates inside of China. Who else has done that? Elon Musk. I think at the end of the day, they will figure out ways around it. So what's happened is the negative headline for Apple in China has been a contagion episode for the rest of either large cap tech or tech as a whole. And I think the market is overcorrected.
When you say the information on China and Apple.
So before we go further here, in regards to Elon Musk stuff, Tesla, China, everything like that, let's just address this thing. Large cap tech rallying when first rate cut comes. I am not confident in that. Let's just put it that way. It's certainly potential, but you got to understand, like usually when the Fed starts cutting rates, it's usually because they're very worried about the state of the economy. If you have true worries at a time period about the state of the economy and what could be coming, I could tell you it's likely not going to rally. You saw that in the great financial crisis. I mean, they were cutting rates, and where was the stock market going? It was crashing, right? They did all the rate cutting they could possibly do, and the stock market just kept going down and down and down. So don't get too excited about rate cuts. There is a potential that it's soft landing. They do rate cuts, everything's fine, but I'm just saying, like, there's another potential that's very serious where they start cutting rates, and it's because the economy is starting to get hit very, very hard. All right, next stock up here. What is it? Is it amazing? Is it an amazing stock? Let's see if it's an amazing stock or not. No, it's not amazing stock yet. We might get to an amazing stock in a minute. Skyworks Solutions. We're up about 31% on the stock, up about $16,000. Now, do keep in mind, this doesn't account for any dividends received from any of these stocks, which obviously Skyworks is a dividend payer. So we've made much more than that over the years of holding the stock, right? But when it comes to Skyworks, they're in a bad place short term. There's no doubt about it, okay? There's a reason the stock hasn't moved in a year, basically. Now, the company trades relatively cheap. It trades at about 11 times this year's numbers. It does have a dividend yield of nearly 3%. But the problem with Skyworks is they get about, it's usually anywhere between 40 and 50% of their revenue from Apple. Here's the deal with Apple. iPhone revenues have been going down. Volumes have been going down. I wouldn't be surprised at all if iPhone volume's down again in 2024. So for Skyworks, it's, volume's everything for them, right? They only have so much content they can sell into an iPhone. Maybe it's $20, $25, $30 worth of content. So at the end of the day, it's all about volume. That's how they push up their numbers, right? Now, Skyworks has many other customers, keep in mind, outside of Apple, but Apple's such a significant customer for them. So if iPhone volumes aren't very exciting over this next, let's just say 12 months, it's going to be a holdback for Skyworks overall, okay? So this is something to kind of keep in mind here. Also, there's a few competitors in regards to Skyworks, but the problem is these companies usually work so close together, it's hard to just rip and replace for a company like Skyworks. Same thing with Cirrus Logic, ticker symbol Cruise. It's a stock I owned in the past, done me tremendous. That's another semiconductor company that's really in the audio space. When it comes to Apple, these companies usually work close together. So they're seen as like, oh, you can just rip these out, throw another chip supplier in there. It doesn't really work like that, especially when, you got to understand, Apple's working on iPhones 2 and 3 years before they ever come out. This iPhone that's about to be shown off and come out, this iPhone's been in the works for quite a while now at this point in time, okay? At least a couple years. And so that's something to kind of take into account in regards to Apple, Skyworks, and all these different companies in general. So balance sheet's phenomenal at this company, phenomenal management team. It's just not the most exciting stock in the short term. Now, with that being said, would I be a buyer of Skyworks Solutions? And the answer to that is probably, especially if the stock goes any lower. Let's say Apple gets hit hard over this next 6 months or whatever, right? A lot of people are like, oh, iPhone 15 is not going to move volumes, revenue is going to be down next year, profitability is going to be down for Apple, blah, blah, blah. Okay, let's say Skyworks goes to the 80s. I'll likely be picking up shares of Skyworks, especially if for any reason this position went negative into the red. Definitely a pickup for me. There's always a potential that Apple could want to replace Skyworks with their own chips and try to do their own thing. But you got to understand there's so many patents that go into that. They could end up in a legal mess. Many times it doesn't make sense for Apple to do something like that. So Skyworks Solutions, great company, not in a great spot short term, okay? And I might be buying it if the stock was to go down a bunch in the short term. Alrighty, folks, next stock up here. Maybe this one's an amazing stock. Let's see. And it is Amazing Zon, all right? So Amazing Zon, somewhat of a newer position for me. I believe I started adding this one the end of last year and then certainly added a lot in early this year. Sitting at about a $145,000 position right now. We're up about $32,000 on this one, up 29% so far. I think it's very small numbers compared to what will be up long term. Now, in regards to Amazon, this is another one that's a little confusing. It's trading at about 63 times this year's expected numbers. I don't think that's accurate. I think Amazon's going to post some way better earnings per share. This current quarter we're in right now, that Amazon should report at the end of October, beginning of November. And I think they're also going to report much better earnings than expected next quarter as well. When I look at the cost-cutting measures they've been doing, and Amazon's just one of those companies that always finds cost synergies. I think revenue is going to be stronger than a lot of folks anticipate. So I actually think the company's trading at about 50 times, 50 to maybe 55 times this year's numbers, okay? Now, with that being said, they're still relatively expensive, right? We're talking about 2 times, 2.5 times the market in general. But you got to understand, when it comes to Amazon, they have so many growth levers all over this company between Amazon, Amazon Web Services, the advertising business, Prime, Whole Foods, Twitch, everything they own there, that I look at Amazon and I see a company that has, 10 plus years of huge revenue growth still ahead and profit growth that will exceed revenue growth overall for Amazon. So obviously with Jassy and the team at Amazon, I absolutely love it. I'm expecting Amazon to be an outperformer of the S&P 500 over the next 5 years, and quite a decent outperformer overall. So it's a tricky one. It looks expensive, but Amazon, you got to understand about Amazon, the stock always trades rich. It's never going to trade cheap. If you're on Amazon for a 15 PE ratio, it's just not happening. I hate to break the news to you, okay? Amazon's, since the first time I ever looked into Amazon, which was probably 2010 maybe, or 2011, because I was like, oh man, this Amazon company, I think they're going to be huge with e-commerce, and everybody, I could picture everybody ordering packages in the future and all this stuff that, obviously ended up playing out. But I remember I looked into Amazon, I couldn't even buy it back in 2010, 2011 because it traded rich. And I'm like, I can't pay that sort of PE ratio for Amazon. That seems crazy. Yeah, that was before I really knew how to value growth stocks overall. So Amazon, I probably not. Will I buy it? I'll probably not buy any more shares. I'm pretty happy with the shares I have. If the stock was to go down a bunch and next thing you know, it's under my cost basis for any reason, we had some sort of stock market crash, sure, I'll buy Amazon then. But I've built the position out. I'm happy with what I got. I got 145K in this one. And so I'm just kind of feeling like let it run in regards to Amazon, okay? That's Amazing Zon for you. So